With us for more for his take from Bangkok is Andrew Stotz, the head of Thai research at CLSA. So by definition, Andrew, this would be a technical recession. I mean, are you expecting something like this?
Yeah, our forecast for 2009 is a minus 1.5% GDP. So we've also got minus 25% earnings growth for 2009. So we think that actually the whole year is going to be pretty rough.
As rough as what? What sort of period in the Thai history can you compare it to? Is it going to be as worse or even worse than the Asian financial crisis?
Well, originally I thought that it wouldn't be as bad as 1997, the crisis time and aftermath of that, which I lived through and was a very, very painful time. But what I'm seeing is that, in fact, this could be worse. And the reason why is because not only do we have a falling domestic economy, which we had back then, but we don't have exports saving us. And at that time, we had exports saving us. So if you look at our capacity utilization today versus 1998, right after the aftermath, we're only 6 percentage points away from the 55% capacity utilization low. And that happened in only a couple of months. So I think it will be a very, very rough year.
And it's going to be pretty rough when those numbers come out, I guess. We got export trade today and CPI next week. What are they likely to show? Which one is going to be more in trouble? Is it exports or domestic demand?
Well, originally, a couple of months ago, we were seeing that exports were collapsing, but domestic demand and the imports weren't collapsing enough. So we were ending up with a trade deficit. But what we saw in the December numbers and started to see basically was the fact that we were starting to see that the imports were falling and the domestic economy is slowing. So that brings us back to a current account surplus. So I think the good news is that we probably will see the fall in domestic demand will slow down the import of oil as well as other imports of machinery and the like, and that we'll see the import numbers falling, and therefore we'll end up with a current account neutral or surplus for 2009, and hopefully that starts in January.
And end up with the government trying to sort this problem out. I mean, are they moving fast enough to get the money to the people? Because the parliament's going to vote by late February and the funds aren't going to get to the people by March.
Well, it's very hard to get money out of any government these days. I mean, it's one thing to announce packages, but to actually get the money approved and then to disperse the funds. Thailand's never had a record of dispersing funds quickly. And so it is going to be a lot of effort and time to make sure that this money gets out and gets out in time. And so it isn't going to be there's not going to be any major stimulus happening in the next month or two. So it is going to be a bit of a delay on that. And that's what's going to keep, first quarter down pretty bad.
And not to forget, Andrew, the big if in politics. I mean, nobody really stays there for more than 6 months. It's a long time for a Thai premier to hold on to power. Is that going to be a problem, politics?
Well, in Thai political years, this government may last for a very long time, which means I would say this government could probably last for about a year. It's possible that they could last longer. Right now, I think the only thing that worries me about the political situation is that this is a coalition government with a very, very strong party that's come in, that's broken away from Thaksin, the Ne Win faction, and that faction is cooperating with the government. And I think the trick is that they have to continue cooperating because they don't have any place to go right now with Thaksin and the red shirt opposition, let's say, weakened. So the result of that is I think we do have probably 12 months or so where we will see that there will be stability and this government will be able to chug along. And that's the best news that we could probably come up with, is if we could just have the same prime minister and without too much disruption from the opposition. And that hopefully will get people a little bit more confident that politics is somewhat back to normal.
Yeah, well, at least you got the Bank of Thailand working its way to cut interest rates. February 25 is going to be the next meeting, but how big a cut is it going to be? Because it already did up 1 3/4 percentage point cut since December 3rd.
I mean, there's still room to go, and I think that they could probably do a 50 basis points cut at that time, just to continue to send the message that they're willing to cut in order to spur the economy. The problem is that cuts aren't going to spur the economy. For most people, whether it's in Thailand or globally, just because interest rates are down doesn't mean they're going to rush out to the bank and start borrowing money. And with capacity utilization now down to 61%, most companies are already, let's say, operating at a very, very low level of capacity utilization. So just because money's cheap doesn't mean they're going to go out and buy equipment. So I think we have to be careful. But I think what the Bank of Thailand is trying to do is send a signal to the banks that they're aggressively moving down the interest rate, and they expect the banks to follow. There's not been a very clear connection between the Bank of Thailand rate and the bank's rates over the last, let's say, 5 to 10 years after the crisis. They're trying to push the banks to bring down their rates. So that's the reason why I think they may come out with a big number and continue to put pressure on the banks.
Andrew, we got about a minute here. The market's pretty rough as well as the economy is, but is there any way that we could pick and choose cheap stocks right now, or is it time to just stay on the side?
Well, I think in Thailand, we have the unique thing of having most of the market being energy and the rest of the market being banks. So I guess if I had to pick and choose, I would probably be in the banking sector, and then maybe at some other consumer type of safe things like telecoms as an example. But it's a really rough time right now to be getting aggressive in any one sector. But I guess if I had to pick and choose, I would be into banks.
All right. Well, thank you so much for joining us. We appreciate the views. Andrew Stotz.